following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, and let's kick into a great July 4th holiday, folks. This quote is by Vincent Barnett. Almost everything is more complicated than it seems, but almost nothing is hopeless. Market-wise, let's take a look at it out here. We have the Dow Industrials up 103, NASDAQ up 17, S&P's up 10, gold contract down $4.80, trading at $1,167 an ounce. Silver down 6 cents at $15.51 an ounce. Platinum up 4 at $1,084 an ounce. Light sweet crude gets smoked. Broke a B point with volume. We're down 270, 56.79. Light sweet crude's on its way to 54. Bonds. We have the 10-year down 22 ticks, 125.15. 30-year almost off 2 points, 1.30 at 148.29. King dollar. King dollar's up 849 ticks. That's testing out the highs of Monday, 96.51. The euro down 98 at 110, and the yen up 67, trading out at 123.17. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. We'll start with the E-minis, folks. Right now, we are at 2065. The high out here today was 77. It gives it up, and guess what? As we come into this close, what I expect you're probably going to see is that it's going to try to get into a flat market. Each and every downdraft on the 10-minute, folks, okay, had some juice behind it, including the one that was just generated at 1,400 hours at 2 p.m. Eastern Standard Time. If we take a look at the SPY, what you're setting up here, folks, is a nice ABC structure on the way down. We got up to a price point on the SPY today of 208.03. We're going to do probably about 150 million, do about 120 million shares. That's going against 202 million shares. You know, you come down with monster volume, you go up, you can't even hold price. Your A point on this is the 213. Your B is down at the 205, so you get $8. Your C probably is today. That's going to give you a 200 price projection, and the price projection here comes down to the lows that were generated out here on January 15th. That's the bottom of the consolidation that we've been in for a huge amount of time. NDX 100, and what you have also out here is this. This is a typical bear market action that wants to go lower. Each and every sell-off, each and every bounce is getting sold off ASAP. NDX 100, same type of setup in the NDX 100. The NDX 100, if we take a look at the Qs, got to a price point today of 108.34. You're at 107.67. We've done 16 million shares. We're going to probably do about maybe 18 million. The 18 million is going against 50 million. So you can see the correlation is pretty intense. Gold. What do we have with the gold contract? Gold continues to have a hard time holding price. Gold out here today, and it's going to be intriguing because as we go into the long weekend, you know, we'll see where this whole thing shakes and bakes. What we have with gold out here today is this. Gold has done 86,000 contracts. You're at a price point right now of 1167. The swing point it's going after is the swing point that was established on the 5th of June. That swing point is 1162.10. Your volume there is 151,000 contracts. So gold's going to need a lot more, but I suspect it wants to go after that level. That's where it wants to go after. We go take a look at the TLT. Now, the bonds, folks, the 30-year, the 10-year, we're going to look at the 20-year plus bond fund first, the ETF structure. And what you're going to see here is this. The bonds were in a monster ABC structure on the way down. The price projection for the TLT was 110. Bottom line, you went down from a price point of the 123. You got into the 115. My take is that it doesn't want to finish that ABC down, and this is why. What we had in the bond market is that we first got into a low on the 10th of June. That low in the TLT was 115.26. You come off that low, and the first day you come off that low, you come off with some juice. We come off with 13 million shares. We went from the 115 up to the 117.97. We continued higher, and when you take a look at the 17th, what you had there also is that you were going down, but you were actually pushing higher intraday first. Then what ends up happening, we come down and we test the lows. That was generated out here on the 26th. Then you went topside once again with juice, with volume. If you take a look at the 10-year and the 30-year, the actual bond contracts, they are set up the same way. The 10-year right now, we're coming back with 117,000 contracts. That's after getting over a swing point with 169,000 contracts. That was on Monday. Tuesday, we also did 170,000 contracts. So you're pushing higher both Monday and Tuesday with volume. And what that sets up higher prices. So this is going to be wild watching how this whole thing shakes out. What I do expect you're going to see there is what? Is that you're going to see markets continue to go lower, and you're going to see a dislocation inside the equity markets that is going to push money, a lot of money, very fast into the bond market just so they can get the money back. Now, King Dollar. What do we have a King Dollar? This is a classic on King Dollar. Now, this is really going to get interesting, and this is why. So, on Monday, they closed the Greek banks. You'd think that once they close the Greek banks, the euro will go down, the dollar would go up. Well, what ended up happening is that did happen intraday, and it didn't hold. The dollar index had got to a price point out there of 96.69, ended up closing, though, at 94.95. What we did there is that we went higher, however, with 72,000 contracts. When you go higher with contract value, and don't hold price, what I've seen is that whether it's higher or lower, by the way, you test it very quickly. Now, we haven't tested it yet. We're getting up to it. The intriguing part here is that you're getting up to it and you have lighter volume. Now, it hasn't hit it, so the test isn't here yet. I expect, what more than likely we're going to hit it tomorrow. So this one's going to be a tough call as to, okay, you're going to test it with lighter volume? You're going to come back down? Well, bottom line, we'll see how that shakes out inside the correlation of the dollar versus what the market wants to do. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow is up 107. NASDAQ's up 18. S&Ps are up 11. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the airlines, folks, okay? Bottom line is that the Justice Department has opened an antitrust investigation into whether the airlines are discussing how to control the supply of seats. Bottom line is that, these airlines have been going down for quite a while, and it's going to be really interesting, to see if, in fact, that's someone knowing that the Justice Department themselves may go after the airlines. Bottom line is that what you do have out here is this. If we take a look at Delta first, Delta is coming down today with 25 million shares. It has that high volume low that at 38.97, and you're coming into that high volume low, and we're pounding with volume. It looks like it's going to be a monster ABC structure on the way down. Now, what you also have is that as it's been making its way down, is that it's that good old October 2014 price level. The top of that price level is 35.14. The bottom of it is 30.12. And that little baby is going after it. The transports are already there. And the transports are there, by the way, not from the airlines. The transports are there from the rails. The airlines have added to it, but the rails are the ones that are really getting whacked, and that has to do, of course, with the oil market. If we go over to and we take a look at United Airlines, what you're going to see, United also going into the high volume swing area with volume. The high volume swing we're talking about in United is 49.85. We've got the 50-10 today. We've done 11 million shares, and that's going into 12 million. We take this and we take a look at it on the weekly basis. Same type of setup on the weekly. It's going right after that October level. The high of the October level on United is 45.69. So you can expect that we're going to see more destruction inside of that whole sector. Let's go to Jack in Hope Sound, Florida. Hey, Jack, what's going on?
Hey, Tom. How you doing?
Doing great, man. You having a good day out there?
I'm doing great. Hope you are, too.
Yes, thank you.
Excellent. Hey, you probably already noticed this. I'm sure you did with the IBB, but the two best performing sectors, the IBB and the cybersecurity, both opened at the highs and have sold off all day. I was wondering if I don't know the volume on those, if they're failures, if they were light volume, or if they had good volume today.
No, the light volume. And this, okay, so let's go through the IBB first, okay? So the IBB, folks, okay? Now, the IBB hasn't broken down yet. You know, we happen to go short the IBB today. Whether it's we did the doubles and the triples inside it, okay? And this is why. This has been a wicked trade, folks, okay? Meaning that the IBB, the first high that was generated out here was March 20th. That high had volume. It got over it. The high we're talking about there is 374.97. It got over it with dramatically lighter volume. It came off it. Even when it came off it, it wasn't a lot of volume, but it came off it and got inside the range. So when I looked at it this morning and I looked at the equities that were inside the IBB, you know, there was some weakness here. And we had the pop on the open, which I wanted, right? So what I'm looking for is this. You have a consolidation and you're inside the consolidation. That sets up that, okay, you can get down to the low that was generated on Monday, number one, and that low gives you 360. Well, we might get right down to the bottom of the consolidation, which is 330. Now, what you have here is that you got to a higher high today, and you had a contraction of volume, which you needed, and we got the sell-off, as Jack was just saying. We've gone from 375 to 367, and this is how you have to do it. We do we're going to come in with lighter volume. So what that sets up is that's going to set up a test, at least, of the 360.57, and you know we'll see whether we get volume in the baby or not. You know, that's the way I'm looking at this right now. So I'm keeping it tight, but the bottom line is that you know we'll see if that setup you know works out. If you go over to the BIS, which we do have, the BIS, folks, is the pro share, and the LABD, which is the direction share. That is operating correctly also. You know, that got as low today as 27.75. It rejected lower price. It had only 460,000 shares, and it's going into 797. So I you know, that's saying, okay, man, that's a good little setup. That should at least test the highs of Monday. You know, so we'll see where this shakes out. You know, because that sector there's no doubt, that's the sector that has not even budged. And when that sector budges, folks, get out of the way in the NASDAQ composite, because that itself, the NASDAQ composite, that's going to, you know, that'll really come down with some juice when and if the biotechs fall apart, you know, so.
Well, I thought it was interesting because it coincides exactly with that cybersecurity, which has also been hot.
Yeah,
if you look at that hack, HACK.
Oh, cool. Okay, man, I have never looked at that. Let me pull that up. Okay, cool.
It was on exactly the same path as the IBB today.
Okay, cool. Let's pull this up. HACK. So this is look at this. Pure Funds Cybersecurity ETF. Okay, so.
But it's been like the biotech. It's been on fire.
Yeah, it has. And now, what this did. Oh yes, yeah, I like this too. This is interesting. So this one here, you know, we got up to this high of 33.91, and then you came off the high with volume. Now this is a better indication. You know, this is kind of a neat setup actually. Let me just see something. So if I look at the small ABC up, if that was the small ABC up, it's 20. So 27 was established March 26th to 30. That's only 3.5 points. That gets you 32. We went to 34. Oh, see, this is cool. So check this out. This is so cool. You called with this, Jack. Okay, so check this out. This was an ABC structure in the way up, and it got extended, which I love. So the A point is 27.05. The B is 30.74, so you're talking 369, which would get you, the C is 28.80, 29, 30, 31, 32, and we got to 34, and the last time we had volume was when it took the B point out. That's pretty cool. And then you came off the high with volume. Now see, when you come off the high with volume, folks, what happens is that your probability gets larger that you're going to get another sell-off. So we'll see how this attacks that Monday low, because this did the same thing. This is going to have a higher high today. It's going to have lighter volume. We're going to come in with about maybe 1.7 million, and you're going into the 2, and it couldn't hold price. You know, so this one here, you'd like to see it get under 30.94 or even the 29.51 area. You know, but the type of action that we have out here, meaning that every rally is getting sold, is pretty intense. There's no doubt, you know.
And those two have been performing very, very well into the weakness, or coming off the weakness.
Yeah, which is a whole different animal. There's no doubt, man. Cooking,
right,
brother. Okay, have a great one. Have a safe one. You stay right there, folks. We're coming back with our man, Mr. Darryl Martin. Dow Industrials right now up 112. You get the NASDAQ up 21. S&Ps are up 11.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 118, Nasdaq's up 22, S&Ps are up 12.5. And as we do each and every Wednesday at 30 past the first hour, we get our man, Mr. Darryl Martin. Don't forget, folks, Darryl, every Wednesday, every Thursday, Friday morning, 10 to 11, right here at TFNN, does an outstanding program. Also, the program specializes in the Nadex product. If you haven't test drove the Nadex platform yet, this is an awesome time to do it, folks. You have high volatility. You get markets that swing, whether it's 10, 12 S&P points at a time. The way you do it, you come over to our website at TFNN. You're going to see the banner on the top and the side. You can hit the banner, bring up the exchange. They'll put $25,000 of paper money into your account. You can listen to Darryl every Wednesday, Thursday, us on Friday morning. And you can check out his scanner. What the scanner does specifically is this. And you can test drive that scanner absolutely free. What the scanner will do will give you the best option, meaning contract, that you could buy for your strategy. It's not going to tell you whether to go long or short. When you develop the strategy, meaning what you're looking for, guess what? It will give you the best contract at that time. Darryl Martin, what's going on?
How's it going, man?
It's, a volatile market, and it's a beautiful thing, man. Volatility is a great thing, man.
No, it's been fantastic with all the, the Greece news in and out, and the votes coming up this weekend, and a lot of volatility. Some flat markets as well you can trade and take advantage of. So, just while they're waiting on the vote to come out now, and on July 5th, where the people are voting their referendum.
That's going to get interesting, isn't it?
Yeah.
I'm trying to figure out myself. Okay, so picture this, folks. Okay. As to Thursday night, okay, where are you going to position yourself for Sunday? It's going to be intense, man.
Oh, I know. Nadex opens at 6 o'clock. I'd be very hesitant to hold a position into the weekend with that vote coming out.
And no doubt. No, it's not worth it. There's no doubt.
It's like, enjoy your holiday.
Yeah. There's no doubt about that.
Go ahead.
We had a great show Friday.
We knocked it out of the park, made some money. It was nice.
And you know what Tommy was bringing up to me, and what we've realized, and this is something, folks, okay, when you're trading these contracts, you really want to wrap your head around it. My son, he's, probability-wise, he's amazing. He's played, I don't know how many hands of poker, okay, but pot odds, he can get them right to the top of his head. So watching him trade these contracts is really a trip, because what I never realized, and this is, if you're trading this product, folks, okay, you want to wrap your head around this. When you're going in either early and you have a premium that is inside there, meaning early in the day, and you're even in the money, what you very well may want to do is swap out of that contract. What we realized this week, Darryl, right, is we swap. Well, actually, that Friday there, I end up swapping out of the 80-point ones, because what was happening there, folks, is that we're in the money, good too. And then what ended up happening by about 2 o'clock in the afternoon, what was going on is that for what my risk was, meaning versus the reward, meaning the spread, it absolutely made sense to swap out of the 80 and go into the 40-point spread. Okay?
Yep.
Because I was taking...
Basically, how much more can you make versus how much more do you have the potential to give up?
Yeah.
So
and
go ahead
I know
and take
that
profit on one and switch over to the next one.
Yeah.
Because it'll limit your risk, and it actually opens up a little more profit going. Yeah.
And what it opens up, which I was really psyched about, it opens up that on this particular one is this is what ended up happening, folks, is that I only could make $400 more. No, I only could make $400 more on the contracts. I had 2 of them, right?
Yep.
And then, because I had already made quite a bit of money. And what was happening is that it's like, hold it, man. I swapped out and went to the 40-point one, and then I doubled up on the deal. So what ended up happening is this, is that I could lose the same amount of money, but I had twice the firepower, and of course, then, it came in anyway. It's like, oh my God. So if I did the same, I was risking $200 less. That's the bottom line, which is just, so if you're trading these, folks, you want to start. And the next, show we'll do, we'll get into that, because, it's right in front of you, but you got to trade these for a while to really understand that way. We actually just got to keep looking at the contracts, right?
Yeah. And the scanner makes it where you ought to be able to figure it out pretty fast.
Yeah, which is so cool, man. Amazing.
Yeah, it adds up quick. Just knowing that other contract that can make you more money with less risk, it pays for itself.
Yeah,
so.
And it's what you're doing, folks. All you're doing is swapping out a contract and giving up nothing. It's like, oh my God.
It's just an option roll.
It's an option roll intraday.
Yeah.
And which is just amazing, man. It's those contracts, man. I'm sure they're getting some good action, man, because this type of action inside the marketplace is just amazing.
It is, and also, something to remember as far as the action in the marketplace. A reminder for all your listeners out there.
Yeah.
We got non-farm. We got NFP and an unemployment rate tomorrow morning.
Yeah, I'm looking at this right now. I'm looking at what you have up on the Tiger TV.
That's usually a Friday thing, but with the holiday, they bumped it up to Thursday, so that could easily catch some people off guard.
Yeah.
Not being aware of that very market-moving event that happens, each month. So that's just a reminder for everybody. Make sure you're aware of that big event. My guess, that's going to come out. It's going to pop. We may get a little bit of trend on the indices. It'll just be smooth. But, after that, there's not going to be much left. Like the Forex will be dead, and we'll maybe get a little bit of an indice trend off of it. And everybody's going to be going home. They're going to be going home for going out of town, everything for the holidays. So,
yeah.
That's the event. It's right there. And then markets are pretty cooked after that.
No, I agree. Because what happens, folks, is that coming into this 4th of July holiday, these deaths, people are going to be going out of the Northeast by 11:30, 12 o'clock. No one wants to get trapped in a huge amount of traffic. That's the bottom line. And
they also don't want to be trapped in a lot of contracts over a holiday weekend that adds on with a Greece referendum. So,
oh, yeah.
So they're basically not going to be putting on a positions. I mean, they've already unloaded them, and they're going to be, it's just going to be everything that's going to get loaded and unloaded is going to happen right there in that event, and then it's just going to flatten out.
Yeah. So. And yeah, it's going to be. Listen, the bottom line, folks, whether you're a bull or a bear, you have trading markets now, and the bottom line is that it's not a time to rest.
Yeah, trending, flat, everything. I mean, it's time to jump in. So.
Yeah, what was interesting. The premium aspect of this is really going to be interesting because when you do get those large downdrafts, like this morning, the premiums inside the NQs were. I went in them early. I went in them over 6:30, and they were big, man. They were like 12, 13 points. Now,
I got like 28 points yesterday on a combined iron condor on a 40-point wide spread.
Wow!
So I got more premium than I had max risk on a condor. So it's pretty sweet, and it was flat as it could be yesterday. So
yeah,
it was awesome.
No, and that totally makes sense after the amount of energy that it took to go down the prior day. When you have a market that goes down, 300 or up 300, folks,
yep.
The amount of energy that takes is dramatic, and normally you basically lay around and do nothing.
Exactly, but the implied volatility after that kind of energy is through the roof.
I know.
So it's the perfect combination.
How cool was that, right?
Yeah.
Yeah.
And then something else I got to brag for a second.
Yeah.
Felicity, my daughter, my 8-year-old daughter.
Yeah.
She took the world championship in 13 and under and got reserve world champion in 18
Congratulations.
And under
Oh, that is so cool. Look at that picture. Oh, my God. Look at that big ribbon. That is so cool. Well, listen, tell her congratulations. I look forward to seeing you guys at one of the shows, man.
All right.
Thanks, Daryl. Have a great one, man. Have a safe one. You stay right there, folks. Tom O'Brien. We're going to be coming right back. Tom O'Brien. Welcome back, folks. We have the Dow Industrials right now up 99. You get the Nasdaq up 17. S&Ps are up 10.5. And if you come over to our website, folks, at TFNN, don't forget, 8 o'clock every morning, our man, Mr. John Logan, kicks us off. We go from 8 o'clock in the morning, 6 o'clock in the evening, live broadcasting. Now, as you come over to our website, you're going to see right on the front page, what you're going to see is the new TAS Profile Scanner Plus. You can test drive this, 14 days, absolutely free. The way it works, folks, is that no credit card. You're just going to give us your name, your email. Once you do that, you're going to be able to download the scanner. You're going to be up and going in literally 2 minutes. So check it out right on the front page. This is a great time to check out the scanner. There is videos that come with the scanner, and you'll be able to understand exactly how the setup is on this. Of course, you can check out John right in the morning at 8 o'clock as he goes over what he's looking at on that scanner. So right in the front page of TFNN, you'll check it out. Now, if we go over and we take a look at the E-minis here, this is what you have happening. The volume characteristic inside this is pretty intense, folks, okay? Whether, this is not a retail trader that's been selling into this market each and every downdraft. What we have here is that the last downdraft that had taken place out here, which, was at $1,400, that also has volume. Each and every downdraft, by the way, the first sell-off, at basically at 9 o'clock this morning, it was 9 o'clock. It was 9:30. It was on the open. On the open, we had volume on that. That's when the S&Ps got to 68. Then they popped all the way up to the 74 area, stayed there for 30 minutes, slammed it again, had volume all the way down to 65. Then it went sideways. We got up to the 69 area. And then the next time that we actually had the real juice was at the 2 o'clock time frame. So coming into this close is going to get really intriguing, no doubt, as to how this market is reacting, number one, and what kind of juice that it will have. When you take a look at the volume characteristics, right now, we did 1.1 billion shares in the NYSE on the way down yesterday. That's a lot. We're going to end up doing about 625 million today, which is light volume. Inside the NASDAQ composite, by the way, we did 2 billion yesterday. We're going to probably lay out at about 1.8 billion. So in both of those, what you have is that you have structures, an ABC structure on the way down. And we'll see if this shakes out. What is really intriguing, no doubt, is the aspect that coming into a July 4th weekend, you have window dressing that is in today, and they still can't get any volume going. Some of the high volume, well, actually, let's go over to the XLE. The XLE and the XLF. XLE first. The amazing part about the XLE is that the XLE has been projecting for a long period of time that oil is going to continue lower. It's pretty amazing, actually. The XLE is an indice that has first gave out some of the best information in the marketplace. When you take a look at this, right now we're trading out at 74.05. It's off the highs of 100, so you're down 25%. You're going after the high volume swing lows that were generated in January. That high volume swing low is a 71.70, so that's still $3 down, which is pretty amazing. What the 70, this is going to be really dangerous, man. It looks to me, we'll see whether this ends up being an ABC structure on the way down. But if it does end up being an ABC structure on the way down, you're talking a very large one. 101 is your A point, and 71 is your B point. So you get $30. Your C point is 83, which would give you a 53, level. So that's pretty intense. Now let's go to the XLF. The XLF, what the XLF did do, and this is the first time that the financials came off the highs and they come off with volume. The XLF out here today is up 30 cents. You have 32 million shares traded, and the 32 million is going against 42. This is also a small ABC structure on the way down. Inside of the XLF, your largest weighting structure is Berkshire Hathaway. And Berkshire not only can't get any traction out here, folks, okay, it's pretty amazing how Berkshire is actually set up, because Berkshire Hathaway, I believe, has already hit this October level that I've been talking about. Let's see. Put this up. So, October, is that it right? That's the October. Yeah, see, Berkshire's into it. So check this out. Berkshire Hathaway, the October 2014, the high of that is 138.90. We're at 137.36. The low of that is 132. So the way that is actually set up is that because you got into that bar so far right now, that is set up that it's building cause to get down and into the lower end of the October 2014 level, which is that 132. And that's really intense. That's where this market wants to go. We take a look at the transports. The transports, no doubt, have been leading the way. And inside those transports, by the way, that thus far the weakest transports were the rails. We're at 8093, and we're 100 points into that bar right now. So what that is saying also, guess what? That little baby wants to go to the bottom of that range, and the bottom of that range is 7,700. That would be just an absolute mind blower, okay? Because you got to remember, you're off the high of 93.10, So it's certainly a big number, as we get down there. Shanghai last night, you talk about volatility. Shanghai, folks, is a whole different animal. Shanghai, the prior night was down 5%, ended up being up 5% for a 10% swing. And last night was just the opposite. They got Shanghai to open about flat. It went higher and then gave up 5%. What Shanghai has, and this is, so it's pretty cool here, is this. Shanghai is going to give us a huge amount of information. Well, actually, it already did. It's an ABC down. It's a monster ABC down. You have a high volume swing low, 38.47. You're at 4,053. It's a monster ABC down. Shanghai is going to be trying to run into this 3,400 level, which is just an absolute mind blower. No doubt. Let's go to Shivan in Boston. Hey, Shivan, what's going on, man?
Hey, hi, Tom. How are you?
I'm doing great, man. You having a good day?
Yeah, very good day. Happy 4th of July.
Yeah, happy 4th of July, man. Let's make it a great one.
Yeah, I'm looking at the rally, and it looks like it has inching down, and like right now it's looking at the support level, I guess, or resistance level.
Yes.
And is it time to get in now, like if you are for a long term?
I bought it Tuesday. Okay? Now, this is what I'd like to see. This is what you have with Valley, folks, okay? We're at 578, man, and I really wanted to hold this 580, Shivan. The 580 is where it took off. It went up, and, it went up with real juice, okay? It went from, 580, 1 week it's at 790, 2 weeks later it's at 914. If you're at this point here, you can wait to see if that price holds. If that price doesn't, because that's what you want to happen, man. That's the reality. Here, just stay with us a second, all right?
Okay.
Coming right back, folks. Stay right there.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We have the Dow Industrials up 129, Nasdaq's up 23, S&Ps are up 11. We're talking with Shivan from Boston. We're talking about Valley, folks. Okay, this is the largest iron ore producer in the world. The low for the year is 545. The high is 1493. It's hard to comprehend at certain points that you have an equity that is trading at $5.45. But yet takes in $88 billion a year. You know, that's a total disconnect, isn't it, Shivan?
Oh yeah, definitely. I mean, I already took like a couple rides on this one and got out at 883.
Yeah.
And I want to go back in again. Like within like a couple of weeks.
Yeah.
So
Listen, I like the trade. You know. And what you have here, folks, is this. When this came off the bottom, it has all the characteristics that, you know, the out of time of the trade has. Okay? It had tested the lows, comes off the bottom, has monster strength. You know, bottom line is that, you know, we'll see whether this, like I said, I'd rather this 580 hold, you know, because if it doesn't hold, then you're going to get 545 out of it once again, which was the low that was established on the 2nd of April. You know what I mean? So.
Yeah, and I already took the 1,500 position today, so thinking like, yeah, I mean.
Hey, listen, man, on a weekly basis, this is what you've done, folks. On a weekly basis, the stock went topside with 227 million, with 274, and then with 250. It's pulled back with 139, with 103. Okay, and this week, let's see, is even going to be shorter. It's, you know, this is going to be probably a pullback, pullback with about 100, and even if we add in Friday, which we're closed, it's going to probably be about another 103 to 110. So that's 110 going to 227. So it's really a dictation on price right now. You know, that we want that rejection. That's what we're looking at.
Excellent. Thank you, Tom.
Okay, man. Have a great one. Have a safe one. Right. Let's go over to these E-minis. They're rallying this baby into the close. You got 2069 we're at. And if we take a look at this, let's see what we got here. So ESU 5. See if this baby can hold it up. The high on the E-minis today, folks, 77. You're at 68 right now. We'll see what happens. What you're doing is you're coming against the downdraft that was created at 10:30 this morning. That's when we went from 72 to 65. So we'll see whether that baby can hold coming into the close. But that's how this thing is shaking out. The volume's not bad on this bar either, by the way. We did that last bar. We just did 26,000 contracts in. You're going into 76,000 contracts. I don't expect that we're going to get up and above that area. Inside the Dow's up $138. The high for today was 801. You're at 757 right now, which is not bad. The leaders inside the Dow Industrials, Travelers Insurance is the leader. That's up 264. Procter & Gamble, that's a dead cat bounce. That's up 146. You have Boeing up 192 and Walmart. Oh, Walmart's saving itself. That's up 96 cents. Walmart got, check this out. Look at Walmart. Let me pull Walmart up. This is amazing, actually. Walmart got to 70.36. And when you pull this back and take a look at this, 70.20, folks, on Walmart is the number. What I mean specifically is Walmart was in that 10-year consolidation. This is going to be a trip watching this thing shake out. It's come off the high of 90. It comes down to 70.36, and the number, though, that it has to get back inside is 70.25. Amazing. It's Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming back with some numbers. Got some earnings coming out. Dow Industrials are up 139. Nasdaq's up 26. S&Ps are up 14.5. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great night, folks. Let's make it a great 4th of July as we kick that baby off. This quote is by Natalie Goldberg. Follow what you love and it will take you where you want to go. Market-wise, let's take a look at it out here. We had the Dow Industrials up 138, Nasdaq up 26, S&P's up 15, gold contract down $4.10, trading at $1,167 an ounce. Silver down 5 cents at $15.53 an ounce. Copper up a penny at $2.63 a pound. Light sweet crude gets smoked. That's down $2.50 and 56.97. It broke a B point, broke with volume. Crude wants to get out of this 54 level. The bonds, 10-year down 23 ticks, 125.14. 30-year off 2 points and 6 ticks, 148.21. Both the 10, the 30, and the ETF structure of the TLT came down with lighter volume. They all want higher price, lower yield. King Dollar up 799 ticks at 96.46. What King Dollar is up to, folks, King Dollar wants to go after the high that was established out here on Monday. That was a high volume swing point. It had given it up on price, got up there as the Greek banks closed. Bottom line, deviance, yes, in an extraordinary way. Euro down 94, trading out at 1,154 an ounce, and the yen up 67 at 123.16. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, let's go take a look at the world of the S&Ps. What do we have out here? Okay, we take a look at this baby, and what you're going to see is this. We'll start off with the SPYs. What you have out here is that you have a counter trend bounce. You get a B to a C. We did 129 million shares. You were up $1.70. You're coming into 202 million. We take this on the put this on a daily first and see what you have out here. Bottom line, can this get to the top of the downdraft that we had? Yes, it can, which is a 208.83 or 207.57. What you had coming into the close out here, it just came up just enough. If we had closed out where we were at the 1400 hour, it'd be a little bit different the number because you would have basically closed under the price point from yesterday. Inside the NDX 100, if we take a look at the 3 Qs, what we have with the 3 Qs is this. 3 Qs right now are at up 85 at 107.92. We did that with 20 million shares versus 50 million. Bottom line, same type of setup, meaning an ABC structure on the way down. You've come off the high. You come off with huge volume. You do a counter trend bounce. You do it with light volume. And if we take a look at the aspect of, there she goes, 1 second. We do it with the aspect of price and volume. This is going to be really intriguing coming into the long holiday weekend. The reason being, folks, is that tomorrow morning, what we're going to have is this. Coming into tomorrow morning, the market itself is going to go dull at about noontime Eastern Standard Time. You know, the holiday, the markets are closed on Friday. The intriguing thing is that the market's closed, but the banks aren't closed, okay? So we'll see where this whole thing does shake out. We go take a look at the gold contract. So what do we have with gold? Gold, folks, looks like it's going to go after this 62 area. And what's going to get pretty wild here is the aspect of a long weekend. And the gold market in the U.S. at least, okay, will be closing at 1:30 tomorrow and won't, I believe, reopen until Sunday night. The swing low in gold right now, the last swing low is 1162.10. We hit 1166 today. Now, you're doing it with lighter volume, but bottom line is can't hold price. You know, so that is saying, hey, guess what? It wants to get down into those levels. We go over and we take a look at the bond market. When we take a look at bonds, what are you looking at in bonds is this. The 10-year bond out here, pull back today with 1.2 million contracts. That's light volume, folks, on the way back. We had gone higher Monday and Tuesday with 1.7 million contracts. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 138. NASDAQ up 26. S&P's up 16. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had Honeywell up 87 cents. Big Blue was up $1.37. We had Walmart up 95. Boeing was up 201. Oxy was down 182. The oil equities, they just can't handle the price, folks. Let's go to Kevin in California. Hey, Kevin, what's going on?
Hey, Tom.
How you doing, man?
I'm doing well, thank you. I just had a quick question about gold stocks today. I noticed that both the HUI and XAU closed at 10-year lows today, and I was just wondering what you think that means. You know, that there's this divergence between the stocks and the gold contract.
Yeah, and it's a problem. Okay, so if we pull up the XAU first, okay, this is what you have happening. The XAU today was down $1.77. We're at 61.37 now. This is about as intense as you can get, because what you also have here, folks, is this. It's not only that they just closed at a low, but the low that we're talking about right now is the low of the 08 low. Okay, in this case, that 08 low is 63.52. The lot, when that had tested it tested it in November, which is the 61.39. So what that means specifically is that we need a rejection of price, and we don't have it. We go over to the HUI. We take a look at the HUI. The HUI had taken this out last week. And if we pull up the HUI and we do the same setup inside the HUI, what you're going to see is that the HUI is at 145, and it's like, man, you know, you're also below it. The last low out here was 146. So it means that, you know, bottom line, we need buyers, man, and there's no buyers.
Yeah, it's interesting. Do you think that you know, if it comes back next week and we get a weekly closing back above the low, and then, you know, we could maybe get back into something more positive? Or do you think this looks like, having broken this head and shoulders downward, that the chances are we're going to head south from here?
I think that, yeah. Well, let's bring up, if we bring up, I'm going to bring up not Royal Gold. I'm going to bring up Randgold Resources. The reason I'm bringing up Randgold, folks, is that Randgold has been a performer on a continual basis, technically and fundamentally. The setup, you know, they make a lot of money. So Randgold, what you have is that we're at 65. It's off the high of 122. Randgold's acting correctly, you know, because when you just take the XAU and the HUI, you know, that's a slew of stocks. So when I look at Randgold, you know, this thing is still acting correctly. If we go look at Gold Corp, okay, a little bit different, a lot different actually. And
Agnico Eagle's another one to look at that's like kind of like Randgold, where it's not.
Yeah,
yet.
let's look at Agnico Eagle, because because what did happen, folks, is this. On Tuesday, when the gold report comes out, I was looking at an Eagle, and it's like, you know what? I like that setup. Okay, that's, you know, and that's acting correctly also. Well, when I say acting correctly, it's not breaking the lows, and it had, you know, the sign of strength. So an Eagle, I like the sign of strength that it had in January, you know, and it's holding really well. And it had, you know, a few signs of strength daily. And I'm just waiting for another sign of strength on an Eagle. So that's a decent setup too. So the correlation, I suspect, is going to come down to this. The correlation has to do with the amount of equities that are inside the XAU and the HUI. And evidently there's some equities that are inside there that have some big problems.
Yeah.
You know, so it's a mind blower. There's no doubt about it, man. It's like, okay, you know, I mean, it's like, where are the buyers? And one of the problems, you know, we'll see whether it's a problem. You know, when the markets go south, which I think, you know, the S&P is going to go south, it's like, okay, these are already south. Are they going to go further south? Or, in fact, there's a swap out, come in, and you get some buyers in these equities.
Yeah, that's the hope, isn't it? Yeah.
Well, it's hope is a different word that I don't use inside the market, but that would be a realization, yes, that okay, you don't have the buyers. I can tell you that on a technical basis, looking at these setups, I like them. I like the setup inside the gold metal itself. Silver is a problem. For some reason, silver can't catch anything. A few of these others that have got destroyed still look pretty good. It doesn't seem like there's any more selling in them, but we don't have any buying in them. And I've seen this before. We've seen this, twice in the last 12 years that you don't have the buy, and then when the buying comes in, it's there. We'll see where it shakes out, though, man. I mean, it's a tough one. If you're in there accumulating them, that's for sure. And when Shivan called on Valley, the last hour, this is another one that I would have rather I really like to see this hold 580 and it's at 576. And I know that's only 4 pennies, folks, but 4 pennies make a difference in the correlation of holding. They're not necessarily support levels; they're floors. And when you drop below a floor, you can go a lot lower. So,
yeah, Franco-Nevada is another one too, along with AEM and
I like I like Franco-Nevada. I bought Franco-Nevada Tuesday. Okay, now watch this. This is what and it was divergence out here, and this is what the divergence was. Franco-Nevada and Royal Gold, folks, are into the same business, and I didn't like the setup in Royal Gold as much as Franco-Nevada. So that's going to be intriguing to see just how this one shakes out. Do you know what I mean?
Yeah. Looks strong. It looks stronger than a lot of the other ones. It's funny how there's divergence within the gold community, even the large cap names.
Well, I think it has to do with. I absolutely think it has to do with the aspect of how much cash they have on their balance sheets, and are they going to be able to survive this type of downdraft? I think that's serious business, and I think it's on the table, man.
Yep.
Because when you have what happens in the mining business. So check this out, folks. If you own an exploration company in a downdraft, you're better off than owning a producer. And the reason being is this. An exploration company, okay, can turn around and stop spending money, like immediately. A producer cannot stop spending money. So why? Because when you open up these mines, you can't just close the mine down or they'll flat out, okay? You have huge problems and you have a bigger problem opening them back up. An exploration company on a downdraft like this can basically shut down everything. Most of these gold companies, by the way, don't have a lot of employees. The employees that do have are basically taking ore out of the ground, so, the producers that are producing gold at a higher price than we are at right now, which is $11.67, got a problem, man. So, cooking, brother.
Okay, thank you, Tom.
Have a great one. Have a safe one. You stay right there, folks. We'll be coming right back. Dow Industrials closed up 138. NASDAQ was up 26. S&Ps are up 16.5. We're going to be right back.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks, and this is going to be pretty wild, and we'll be hearing a lot of this coming into Sunday. And what it is, so the first survey, at least that I've seen, this just came across the tape. A survey shows that 43.3%, this is the Greece about whether they want to basically go for the deal or not go for the deal. 43.3% said definitely yes. 39.3 definitely said no. This is, let's see. The poll shows 74% in favor of Greece staying in the Eurozone no matter what the sacrifices. That was 1,000 people polled. The margin of error is 3.1. So you can see at a 3.1, bottom line is that you get something that's pretty close out there. Inside the airline business, folks, okay, the airlines are going to, bottom line, have a slight problem out here. And what the problem inside the airline business is the Justice Department basically has opened an investigation, an antitrust investigation, to whether airlines are discussing how to control the supply of seats, a critical consideration in the industry's ability to set prices. Department officials are seeking documents involving the need for or the desirability of capacity reductions or growth limitations by a company or any of the other airlines, according to a letter sent to the carriers requesting the information. Emily Pierce, a Justice Department spokesman, confirmed that an inquiry was underway but declined to provide any details about the potential coordination among carriers. Seating and fares are closely intertwined because companies lose pricing power when the industry capacity outstrips the travel demand. What you have out here, United confirmed that they got the letter from the Justice Department. Delta confirmed, America confirmed. Bottom line is that we're going to get some action out here. And when you do look at these airlines, what is intriguing about this, folks, is this, is that if we look at Delta, so check this out. And all the airlines, by the way, look like this. If I put Delta up, Delta Airlines, okay, it was a one-way ride from $10 to $50. It's been a one-way ride from 51 now down to 40. Monster volume. You'd be breaking B points, and we broke the B, which is the 38.97. We broke it today with volume on the daily. So that's saying it's going to get into lower price. It's almost like when they were pulling back, I was trying to figure out, like, okay, diesel fuel is still cheap. You have every airline, I happened, the last 3 or 4 weeks I had to fly, 3 different times on business, just for the day. I was going in and out. But, they're definitely cattle cars now. Every single airline is full to the hilt. And the fares, basically, are pretty expensive. So I was looking at that and saying, man, why are these airlines selling off? And you know what this leads to the question, like, who knew that the Justice Department was really looking into the aspect of airlines? Can you prove any of that? No, it's not even close. This just might be a sell-off after a huge expansion on the way up. But these babies right now, they're going to basically, they're bend down. They look like they're going to get down quite a bit more, though. That's the way they seem to be set up right now. If we go into the XLE, what is amazing is that the XLE has been projecting for a long period of time that oil is going to continue to go to lower price. What the XLE is doing is that we're down 25% in the energy sector. The energy sector has high volume swing lows that were generated out there at $71.70 in January. We're going after them. And if we break those babies with volume, you're going to see some really heavy-duty destruction inside that whole sector. And it's not like it hasn't already been destroyed. If we go to ExxonMobil, what you're going to see with ExxonMobil today, ExxonMobil takes its swing points out. And we took the swing points out with volume. So if we take a look at ExxonMobil, what you're going to have is this, okay? It's an ABC structure on the way down. Let me put this on a daily so you can see this, because this is a pretty good one. Your A point on this changes to a daily. And what you're going to see, your A point on this was the high that was generated on May 5th. Whoops. There we go. There we go. So your high that was generated was $90. Your B point is 83, so you get $7. Your C point is 85, which that sets up a 78. And we broke the B point today, and we broke it with volume. That's on your daily. We take a look at this, and we put this on a monthly. What you have is that this looks like $67. And that's pretty intense because in 2008, we only went to 56. It's like, okay, what is happening here inside the aspect of oil? So if we go take a look at the actual oil contract, the oil contract out here today broke a B point, broke it with volume. And, after peak oil, which we never had, by the way, now oil is saying that, guess what? It wants to make us run all the way back to 52 to 48. Well, this breakdown today was pretty intense, folks. We did 344,000 contracts. That was breaking 150,000 contracts. You did it with velocity. You're inside the lower trading range. As soon as you get inside 59.24, which is inside the lower trading range, and what that sets up is that sets up run down into the 48 area, which is pretty intense. In fact, it's really intense. There's no doubt about that. What it's going to do for us, of course, going the rest of the summer, is that things are going to be very inexpensive. If we take a look at the crude, so crude oil was down 4% today. Gasoline, unleaded gasoline, that got toasted and roasted. That was down 3.5 pennies at 2.01. So that's at 2.01. Now, what unleaded hasn't done yet, XBQ5, what unleaded hasn't done is that this hasn't broken the lowest swing yet. The lowest swing on the unleaded is 197. What it did do today is that it stayed inside, though, the range. It had broken out of that range last week. So, we'll see if, in fact, how much lower that baby actually wants to go. There's no doubt that when we get into the 4th of July holiday, so picture how this works. Tomorrow, you get a full day. Friday, we're closed. Sunday, that vote is on in Greece. The markets are opened on Friday in Europe. The markets will be opened Sunday night at approximately 3 o'clock in the morning, our Eastern Standard Time. We'll see whether they have that vote that's in at that particular time, and we'll see exactly what that means to the market Sunday night. Because, let's see, Sunday night when the future's open, there's going to be action. This is Tom O'Brien. This is TFNN. You stay right there, folks. Come right back. Dow Industrials finished up 138. NASDAQ up 26. S&P's up 17.5. We're going to break back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. 877-927-6648. Give us a call, folks. What is going on in your world? If we go over to the world of Nike, folks, okay, Nike's trading at its high out here, and what's going to be really wild watching this whole thing shake out is that the guy that started Nike, Phil Knight, bottom line, is going to step down next year as the chairman. And, you know, this has been an extraordinary run. You know, this guy started this company in 1964, and he was 26. He's still in great shape, and he's 77. I suspect that, you know, he wants to basically groove a little. He's still going to be, I think, let me just look at this for a second. as to how many shares he still holds. Let's see. That's going to take a little bit longer than. He's not showing up at the top of it. But the bottom line is that this run has been extraordinary in Nike, and even though he's going to be leaving next year, this is an equity that basically hasn't tested the 110.34 swing point. That it looks to me like it's going to go higher. So inside the context of that run doesn't look like it's over yet. One of our tigers just gave me a heads up that the Globex will be opened Friday to about noon. So there'll be some trading inside the futures to about noon. I guess what you do have, my understanding is that some banks are opened. I don't know if they're all open, but the equity markets are absolutely closed. Okay, those little babies, are going to be closed up tight. And what you're going to see is that they're not going to be closed up tight. They're going to be basically dull tomorrow, starting at noontime. Some of the high volume stocks you had out here. Well, here, let's take a look at the volume. So NYSE volume came in at 862 million versus 1.1 on the way down. The NASDAQ composite came in at 1.8 versus 2 billion on the way down. Moody's just come out, and you know what cracks me up? These rating agencies, folks, are so out of their mind. It blows my mind. Okay, and what I mean, if we went through the housing debacle, they would always put the ratings down. After the stocks were like $3 to $5 and the bonds were worthless. Okay, well that's what they just did to Greece. So check this out. So Greece cut to CAA3 from CAA2 by Moody's, may be cut further. Oh really? It may be cut further. You're defaulting? Of course they're going to be cut further. What blows my mind is that, number one, how they basically stay in business, because the soft money corruption inside those rating agencies is phenomenal. It's absolutely phenomenal. I mean, I can understand why they stay in business, because what ends up happening is this. So picture how this shakes out. What happens is that when companies are sending bonds out to be sold to the public meaning, whether it's pension funds you're selling to, whether it's states, whether it's sovereigns, bottom line is that they have to basically be stamped by one of these rating agencies. Those rating agencies get paid on every single one of those, okay? So the bottom line, it's a fixed game inside the bureaucracy to basically push paper out. You'd think in the context of how many pieces of paper they've actually pushed out that are worth zero, you think that would change. It hasn't. The amount of debt that has been pushed out in Puerto Rico, that is going to end up being a scandal also. There's no two ways about it. What is intriguing inside the Puerto Rico deal is the aspect of exactly the tax structure and how folks thought they were buying a deal because they didn't have to pay taxes on that debt, when in fact you're not going to pay taxes on the debt, because guess what? You're not going to make any money. So it's pretty intense. Let's go to Mike in Toronto. Hey, Mike, what's going on?
Hi, thanks for taking my call.
Sure.
You're on that same issue of the rating agencies and debt. Why don't you take a look at AMBAC, ticker symbol AMBC, and MBIA, ticker symbol MBI. Are both stocks, when you examine their charts, are they signaling a death spiral?
Wow, look at this, man. Okay, so let's take a look at this. Okay, so AMBAC first. Holding company, they provide financial guarantees through its subsidiaries for interest rate swaps, okay, cash management in municipalities. Okay, so the low is 15.86, the high is 27. The last 3 days, man, oh man, look at this. So we just went from 24 to 15 here. Let's bring this up. Bring it back. We'll put it on a monthly. Well, with AMBAC, it looks like did both of these, let me just see something for a second. This is like crazy. So I think both of these actually went BK in the last one, right?
Yeah, 2008 crisis, 2008 Lehman financial crisis. So is this a replay of 2008?
Yeah, it is. So check this out, folks, okay? Because this chart this only goes back to May of 2013. This is almost like Ally Financial. Ally Financial, folks, was GMC Credit. That went out of business, went bankrupt. They basically got back in as Ally Financial, and they're pushing out huge amounts of paper in the auto business. This is, okay, so stay with AMBAC. AMBAC wants to go to $15.03. If you break that, then yeah, it's like, okay, what's there? Not much. Let me go to MBI. I remember MBI. Okay, so MBI also is an insurance guarantee of credit. Okay, so both of these are probably getting hammered from Puerto Rico bonds also. So the low's 494.
Probably Illinois as well, huh?
I'm sorry?
Probably Illinois as well, huh?
Oh, that's a great point. Yeah, Illinois is going broke also. There's no doubt about it. And look at this, man. It got cut in 40% in 3 days, and you got a high volume swing. Yeah, there's problems here. You know what's the amazing part? Okay, so
would
this
you catch a falling knife?
I'm sorry?
Would you catch a falling knife on either stock?
No. Don't think they don't even. These are going right back. This is going. You're at 588. You know, $4 wants to get tested. 480, but there's no reason this can't basically blow out its low there of 217, man. So
this could be a penny stock, huh? Penny stock delisted.
If this is here, let me just see something for a second. If this is the aspect that it's actually they're guaranteeing the Puerto Rican debt, they got huge problems.
Uh-oh.
Yeah.
Because all the news lines seem to refer to Puerto Rico, right? When you type in MBI, the ticker symbol, they seem to have exposure to Puerto Rico.
That's correct. Let's just see at 2:30 today. MBI. Oh, that's right. I saw what happened. Okay, so an indirect subsidiary, National Public Finance Guarantee Corporation, have agreed to provide $128 million in short-term bridge financing. So these are toast. What they're trying to do is this. Yeah, you stay right there. We come right back.
Okay.
And these companies, folks, came up with money today so that the defaults didn't take place in a couple of these bond issuers. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. And folks, as you're listeners to us at TFNN, don't forget, right on your cell phone, we start programming at 8 o'clock in the morning. Our man, Mr. John Logan, kicks us off at 8 in the morning, and we go to 6 in the afternoon. Now, John has a scanner. That's a piece of software. It's a phenomenal piece of software. You can test drive this right now. It's called the TAS Profile Scanner Plus. What it does, it will scan all the markets. We're talking all over the world, not just the United States. You're not paying for quotes. And in fact, you're not paying for anything because you can do a test drive, 14 days, absolutely free, without a credit card. Just give us your name, your email. You'll download it. It takes all of a minute to download because you're working off the cloud. You're working off scanners that are working very quickly. Check it out. 2 weeks, absolutely free. There's videos that go along with it, and what you can also do to really get your head going into it is make sure you listen to his program at 8 o'clock in the morning. We're talking with Mike from Toronto, and we're talking about AMBC and MBI. And bottom line is that these are insurers, folks, that are on the hook once again. So what happened here, Mike, is this, and folks. Now, check this out. This is pretty creative what they actually did to save money and to hopefully save the companies. And I suspect it's not going to work, but I'll explain what they did. What MBIA did, or MBI, is that they ended up, so let's picture that me and you borrow money, right? Well, what it was, so the Greek bureaucracy's borrowing, the Puerto Rican bureaucracy's borrowing money, okay? They didn't have the money to come up to pay the bond holders. So if a default takes place, this is what ends up happening. When a default takes place, folks, is that if the default takes place, the other bonds that are out there inside, in this case, inside the finance sector of Puerto Rico, they can go into a default immediately if they're tied into that bond. And it looks to me that because MBIA came up with the money, they pushed, they put in $45 million so that they could pay they put in $128 million so that they could pay the bonds off that were due today. And the reason that I'm speculating this, but the reason that I suspect they did that is that is easier to do than letting it go default, and then for the amount of money that they're on the hook for all these other bonds, okay, it's huge. You know,
a domino effect as well.
And it's going to be a domino effect anyway, because the bottom line is that this has been going on for a huge amount of time. I suspect that they're facing it. The amazing part is that you're gonna get some large hedge funds also that are gonna get toasted. And
are both stocks signaling, like, are they like canaries in the coal mine about the debt crisis that we're facing? Kind of like the replay of June 2007 when that Bear Stearns hedge fund just mysteriously out of the blue just blew up.
I don't think that I'm looking for a pullback in the marketplace. I don't see this market here anything like 2007. What I do see is this. There are going to be large funds that get hurt and be out of business in an extraordinary way. This is not, there's a disconnect, and there has been a disconnect between what's going on in our economy and going on in the markets. The risk value has gone up dramatically. Some funds have taken the risk big time, and they're going to go down the tubes. And is there a disconnect? Yeah, but we already went to hell. We're not going back to hell, man.
Okay, thank you very much.
Brother. Have a great one. Have a safe one. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking out right here tomorrow. Look at them, folks.